Hey guys, it's Sam. Now, are you an investor who's found a property that they want to buy, but you don't quite have enough in terms of a deposit? Well, if that's you, stick around because I'm going to talk to you on this video about how you can use other people's money to make up the difference on your deposit. Property is about patience. Hey, what's up guys? It's Sam here, the Property Investors Broker, and as promised, today we're going to be talking about angel investors. I really don't like that terminology, by the way, and actually neither do mortgage lenders. So, rule number one, before we actually get into the real kind of meat of this, is just get rid of that term, right? Get rid of the term angel investor. It's an old kind of like business terminology. Lenders don't like it. Let's just call it what it is. It's a loan from somebody else, okay? So let's get rid of that term to start with. Now, what a lot of people come to me and ask me is, Sam, I found this awesome property. I need to borrow a 75% mortgage. And I say, excellent. How are you gonna make up the difference in the deposit? How are you gonna make up the 25%? How are you going to pay for any work that needs to be done? How are you gonna pay for your stamp duty? All that kind of stuff. Well, Sam, don't worry, I've got an angel investor. Well, straight away, that rules out mortgages, okay? Really sorry to tell you this so early on in this video. If it switches you off, you know, I'm sorry. I do try on these videos to keep people hooked as long as I possibly can, but I needed to drop that bombshell early doors so that you knew. So yeah, can't use mortgages, I'm afraid. Mortgage lenders do not like third parties that they can't do their due diligence on lending money as an angel investor, so they don't like other people's monies involved. They want you to have skin in the game, okay? That's what is so important with this scenario. So you might be sitting there asking, okay, great. So now do I need to borrow the other 75% from this investor as well? Well, the answer is yeah, you could do that. And actually a lot of people that I work with, they will borrow money from an investor to purchase the entire property. You know, various places around the UK, there are properties that, you know, are well under the average price range, and therefore there are going to be people around that might want to lend you 100 grand to do everything and cover everything. They might actually want to be a joint venture partner if they do that, but that's absolutely fine. But if that isn't the case and you are actually just borrowing your deposit or borrowing your deposit plus the cost of any works that's going to be done on the renovation, then actually what we need to make up the difference is not a mortgage, but it's the B word. Yes, it's bridging. Bridging lenders are so much more flexible when it comes to borrowing money from other people, angel investors. So if you maybe have been on a course, maybe you've heard this before, that you can use angel investors' money when it comes to getting a mortgage. No. In fact, I really hope you haven't done that, because that's really sort of old-fashioned advice and you just can't do that anymore. So we do need to use a bridge, but it's cool. Now, there are certain things that we need to be aware of and your angel investor needs to be aware of. I said at the beginning that I didn't like that terminology, yet I've used it about 7 times during the course of this video. Hey-ho. So your angel investor you need to be aware of before we start going and finding lenders is that chances are the lender might want to know a little bit about this person. They might want to see that either those funds that are going to make up the difference between their loan and the purchase price are sitting in your company bank account. If they see that obviously that's come from one large trunk of funding that's come from, you know, your angel investor, then they might want to see that bank account too. You need to prep them for this. They might want to see that actually, you know, how those funds are built up. There's a really good reason for this, and that is that lenders need to cover anti-money laundering regulation to show that they are comfortable that basically this transaction isn't a money laundering transaction. They want to see what is known as a build-up of funds. They want to see that it's been done legally, and they want to see that it's, you know, it's all above board. So prep your angel investor that they might need to show some bank statements to show a build-up of funds to a prospective lender. Now, of course, what this also sort of brings into the equation is realistically, you're probably going to be following something similar to the buy, refurbish, refinance, BRR rule or strategy. So because you're going to have to figure out a way of repaying that investor as soon as possible. So my clients, what they will do is one of two things. Either they will add value to a property to raise it significantly enough that we can refinance the property onto a standard mortgage, and that 75% pays back not just a bridging loan if that's what they've used to take it out, but also the funds that have been paid over by the angel investor. So we have to make sure that that all stacks up. We're only going to know that if we can look into the future, start with the end in mind, a phrase that you hear me say a lot on these videos, and, you know, make sure that it all works. And that's 75% of the realistic done up value, or GDP. Can't even get my my words out. GDV even, can't even get my words out, is basically going to cover all of that expenditure. So that's sort of the one way of doing it. The other way is that we do it as part of a flip, and actually a great way of using angel money to grow your own pot of money, because in an ideal world, you don't really want to borrow money off of an angel. You'd rather use a stash of cash yourself. You're only borrowing from the angel because you haven't got the cash yourself. Now, if you choose down the flip option, of course, what you could be doing is you might borrow from an angel in total. You might borrow from an angel and a bridging lender. You might borrow from an angel and a development lender, because you actually borrow some money to cover some of the cost of the works as well. But when you sell the property, the entire equity is profit. And yeah, you're going to pay some tax on that, but you pay everyone back, and you're then left with a lump sum. So maybe the next deal that you do, you can follow the buy, refurbish, refinance model and start building a portfolio yourself with your own cash, and start recycling your own cash rather than recycling someone else's cash that you're paying for. So that's kind of where we sit when it comes to using funds from angel investors. So what I really wanted to do was to make this really, really crystal clear for you guys, because I know there are lots of people out there that maybe are talking kind of from the point of view of maybe 11, 12 years ago, when it was certainly a lot more possible to get these kinds of loans, these kind of mortgage loans, and have a third party in the background that was sort of lending you the deposit. It's not the case anymore. We do need to use bridging. It's absolutely fine. Don't worry about it. You know, it is something that can be done. So hopefully you've enjoyed this video, guys. I really, really, really hope you have. If you have, can you do me a favor? Please subscribe. It helps me show my videos to more people, helps me give more to more people, spread my knowledge about. I'd be really, really appreciative if you could do that. Hit the like button, give me a comment in the below if you've got any questions, or if you've got any suggestions for any topics that I can do future videos on. And the last but not least is share this video. If you're watching this on your phone, just take a snapshot, put it on your Instagram stories. I would be so, so grateful. And if you have enjoyed this video, stick around for a sec, because I'm just gonna show you another video that I think you're really, really gonna be interested in a second. But for now, guys, have a really successful day and week, whatever you're doing, and I will catch you on the next video.